right, everybody, let's find out everything that Berkshire Hathaway bought and sold during the last quarter. Now, how do we know what they bought and sold during the last quarter? It's because of 13F filings. And these filings are reports that big investment firms managing at least $100 million in assets must submit every 3 months to show what stocks they own. And they're typically released every February 14th, 15th, August 14th, and November 14th. Now this matters to you because it gives us some pretty interesting insights to what these big investment managers are doing. These reports must be filed 45 days after the end of each quarter. So the data you're looking at can be up to 4 months old, meaning it's a bit stale, so it should not be copied. And it's just a really cool way to get some great investment ideas from some of the big fund managers. So don't you be one of those investors that rushes out the day after the 13F drops and load up on something that Berkshire Hathaway or any other fund manager bought. Why? Well, because the 13F filing is just a snapshot from the day of the filing, and they could have blown out of the position by the time the news reaches us. Everyone gets all excited about what Warren Buffett bought and sold. But here's something that not many people realize. It's not always him making the investment decisions. He has 2 investing lieutenants, Todd Combs and Ted Wexler, who do lots of buying and selling independently. Now, I'm just a regular Russ with a free weekly newsletter that you can sign up for in the description below, sharing my passion and quest for quality dividend growth, and I have twice listened to every Berkshire annual meeting since 1994. And I remember Warren saying that he was once asked why he bought a healthcare REIT, and he said, "I've never even heard of that healthcare REIT. I don't know what you're talking about." Now, he may have been exaggerating a little bit, but the point stands that he does not do all the buying and selling. So if you run out and buy something that Berkshire bought, you might not even be copying Warren Buffett. You could be copying Todd Combs. But when he recently sold Paramount, ticker PARA, he did say that that one was all him and it was a really big mistake. So now that you better understand how to think about these filings, let's check out exactly what Berkshire Hathaway bought and sold during the last quarter, and you can do this for your pretty little self anytime you want. Click the link below or just go to 13f.info. And of course, Berkshire's at the top of the most searched managers, and what you'll want to do is click on Q2 where you will see their current holdings, but let's compare that to Q1 of 2024. And we see that they have 41 holdings in Q1 24 and 41 holdings in Q2 24. So what did they do? To find that out, let's sort by the change percentage. And hey, look at that. Ulta Beauty, ticker ULTA, is a brand new position. And if you don't know what Ulta Beauty does, they don't pay a dividend, but they do sell beauty products in stores and online. And it could be an interesting investment, right? Because beauty products are always going to be in demand, but you're going to have to do a little bit more digging to understand the business and where they might be going. But we see that they did add 690,106 shares. That has a market value of almost $267 million. And the second one they bought was Heiko Corp, ticker HEI-A. And they make airplane parts and electronics for aerospace and defense, and they profit by selling to airlines and the government. And there's always steady demand for the airplane components and parts. And from what I've read, they have a pretty high barrier to new competitors, so that could be one of the things that Warren was looking at. And Heiko does pay an itty-bitty-titty dividend yield of 0.12%, very, very small, but they grow the dividend very, very fast. The last 20-year CAGR is 17%, but that dividend is semi-annual, paid every January and July, and they do have some slow raises, and their free cash flow payout ratio, 6%. That is just stupidly low. They can easily cover the dividend and raise that for many, many years, but you're obviously not buying this for the dividend. Now, they increased their Sirius XM Holdings position, ticker SIRI, by 262%. This one does have a notable dividend, 3.66% yield. Simply Safe Dividends, where we're looking at this, has a borderline safety score of 50, 17% 5-year CAGR. They've been growing it uninterrupted for 7 years. Looks like they're about to raise it again, probably here in the month of August. And we need to know why. The dividend yield is 164% above the 5-year average. So hey, it's way the heck up there if you're into dividend yield theory. Oh, and did I tell you it's currently at $2.91 a share, so any stock that's under $5 is a penny stock. Mr. Warren Buffett is the big penny stock investor, increasing that position by almost 300%. Now, from what I see, that dividend does look sustainable at 33% free cash flow per share payout ratio, although the sales have flattened off, but they're still buying back their shares down to 3.87 billion outstanding. And I'd love to know if you own SiriusXM or what you think about their future. Now we pop on back to 13f.info, hit that change percent button again, and we get to see what they sold. So it actually might be less important to focus on what they sold. Anybody can sell for millions of reasons. You know, maybe they have something better they want to put that money into. But unless you're a complete nut job, you're only going to buy for one reason, and that is because you expect the stock price to go up. So without spending too much time on the sales, they sold completely out of Snowflake, internet services company. I don't know too much about them, ticker SNOW. They completely sold out of Paramount. Tough business to be in right now, and Warren just said he made a mistake, so they completely exited Paramount. This is a little bit of old news. They reduced their position in Apple by 49%. Now, I don't believe it. They said that they think capital gains taxes are going to be higher in the future, so selling now means you pay less. I don't know. Hey, whatever happened to Warren holding forever, right? The ideal holding period is forever. Goes to show you there's no hard and fast rule, and you always have to do your own due diligence. Have your own damn reason for buying and holding on to something. They reduced their Capital One financial stake, ticker COF, by 21%. Floor & Decor reduced that stake by 17%, ticker FND. T-Mobile, ticker TMUS, they start paying a dividend. Berkshire trims them by 11%. Louisiana Pacific Corp, ticker LPX, reduced their stake by 10%. Reduced their Chevron stake by 4%, ticker CVX. That one's interesting, but again, it's a slight little trim. I guess they needed to buy more treasuries because Warren wants to make sure that he continues to have more treasuries at Berkshire than the Fed does. And then different share classes here in Liberty Media Corp, ticker LLYVK and LLYVA. You would buy these if you wanted to say that you're an owner of the Atlanta Braves, but they trim those by 2% and 1% respectively. And then everything else remains unchanged. You know, you can pop on this for yourself if you want to follow along and play at home. Hey, if you got value from this video and enjoyed it and had fun, you know, hit the thumbs up, consider subscribing, and in this floating little box next to my head, I'm letting YouTube pick a video just for you, so I'm sure it's fantastic, it's wonderful, it's great, and whatever it is, I hope you click it and get value from it, and I will see you in the next video.